As the crypto market rallies, we have Chainlink, which has really been riding the waves and the momentum. Chainlink has seen a pretty nice price pump these last few days, which has in turn generated a lot of renewed interest among Link users. Let's break down why Chainlink is the best altcoin to ride in this crypto bull run. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the very best of luck if you choose to invest. And happy Easter, by the way, to those celebrating. Just a friendly reminder that I am not a financial or investment advisor. And so, of course, this video is not official financial or investment advice. So we really do believe that Chainlink is going to go parabolic at the height of this bull run. And one of the main pillars that's going to fuel that price surge for Link is this belief in its CCIP. And you may be aware that in July 2023 last year, Chainlink brought out a major upgrade. I'm talking about CCIP, of course, which stands for Cross-Chain Interoperability Protocol. And as the name suggests, it connects blockchains, quite simply. And it's expanded now to Ethereum, Polygon, Optimism, Arbitrum, BNB Chain, and Coinbase's Base, which we talked about in yesterday's video. Check that out if you haven't already. But Chainlink's Cross-Chain Interoperability Protocol, here I'm going to refer to it as CCIP, is a very big deal because it acts like a universal translator for blockchains, which allows them to talk to each other. And so practically speaking, this means that your money, your investments, but also your data can hop around, bounce between different blockchains without any problem. So unsurprisingly, there are several benefits associated with Chainlink's CCIP, beginning with expanded reach, because with CCIP, decentralized apps aren't stuck in any one place. Instead, they can spread their wings and reach more users correspondingly, allowing them to tap into the power of multiple blockchains all at once. We're also getting something that has much higher efficiency, because with CCIP, gone are the days of building separate roads for each blockchain. CCIP kind of paves a super highway. You can think of that kind of analogy. It saves time, it saves effort for developers, and an app can connect to multiple chains with one very simple and elegant solution. Security is going to be enhanced because Chainlink oracles are kind of like the vaults of the blockchain world. And with CCIP, that security blanket stretches even further, thus making sure your data and your assets are safe. And it's also going to offer increased flexibility because CCIP gives dApps the power to be true shapeshifters. They can mix and match features from all kinds of different blockchains. And so dApps can now create something truly unique and much more versatile. Chainlink's CCIP mainnet is not open to everyone. If a network wants to access CCIP, they actually need to apply for it. But the CCIP general access on mainnet is going to roll out very soon. And get this, according to recent data from Dune Analytics, Chainlink's CCIP has experienced a staggering 180% increase in revenue. In January, so just a couple of months ago, CCIP generated $61,000 in fees, but then not even 2 months later, by mid-March, the figure stood at $171,000. This is a very significant spike and a pretty clear indicator of the growing popularity and acceptance, really, of Chainlink's CCIP within the larger DeFi space. It's not just about the numbers. More than that, it's really about the trust and confidence that the community is placing in this protocol. We also have Chainlink integrations because huge players like Ethereum L2 Metis, WeMade, which is, by the way, South Korea's preeminent gaming company, they are teaming up with Chainlink to take their platforms to the next level. And so this represents a couple of big wins right here. In our opinion, really also only the beginning for CCIP. This Altcoin Buzz Spotlight is sponsored by Morpheus Labs, which offers multi-chain, low-code solutions for Web2 firms to enter Web3 markets. They provide you with a smooth and efficient way to get your Web3 presence, which comes with a full suite of tools that offer blockchain as a service. Ready to use and easy to deploy. Web2 firms can now easily transition from the ground up into a fully functioning Web3 project, including Morpheus AI-powered automation and smart contracts. And the best place to buy their MIND token, M-I-N-D, is on KuCoin or MEXC. For more information, check out the link in the description of this video and follow them on Twitter. We also have some very exciting Chainlink developments in the form of BlackRock adoption. So this is representative really of rising institutional interest across the board. A lot of organizations, of course, are interested in cryptocurrency. And this is a little bit of the momentum that we're riding after the ETFs, of course. But BlackRock is pretty much as big as it gets. They are the world's largest asset manager with over $10 trillion in their portfolio. 10 trillion with a T. And they're bullish on crypto. Shown here is Larry Fink talking about the issue. But they're not excited about XRP. They're not excited about USDC. Their focus is on an entirely different niche. Again, Larry Fink is the CEO of BlackRock, and it just seems lately he keeps talking about how bullish he is on this particular asset space. But he's actually specifically talking about RWAs, or real-world assets, which include a wide range of assets that can be tokenized and brought on-chain. RWAs aren't new, but BlackRock's interest in RWAs is fairly new. BlackRock launched its institutional data liquidity fund for USD. And as soon as BlackRock announced its venture into RWAs, you actually had several RWA projects that saw a significant hike in prices. And why not? And the reality is that some people don't trust BlackRock. They kind of see them as a shadowy supervillain of a company, kind of a puppet master in the world of finance. But they are bullish on this narrative. So the question is, given their size, given their influence, given their bullishness, should we also be bullish? Well, according to the research firm K33, if you're looking to ride the RWA wave, Chainlink may actually be your safest bet. Because tokenization is all about bringing real-world assets, like stocks, like bonds, right? It's about bringing them onto blockchain networks, which makes them then easier to trade, makes them more transparent, and makes them cheaper to manage. And recently, the market for RWAs has been absolutely ablaze. Real-world assets governance tokens surged by an astonishing 81%. So we got to ask the question, what is driving this surge? For one thing, TradFi is increasingly exploring new use cases for RWAs. And there's bullish momentum in the market. For instance, Chainlink recently did a pilot with Australia and New Zealand bank ANZ, and it showed how tokenized assets can move between public networks using Chainlink's CCIP. So the trend here is obvious. There's a big increase in RWA tokens, and traditional institutions are using on-chain finance more and more. Blockchain tech is breaking old rules, finally, right? And it's opening up lots of new ways to do old things, traditional things, but more efficiently, faster, and cheaper. And that's the thing about Chainlink. It has positioned itself very well. They are the go-to infrastructure for connecting blockchains to the real world. And Chainlink's system of oracles and its wide range of partnerships make them a crucial player in this particular sector of the game. Very simply, we believe that projects like Chainlink are going to get a lot more adoption, and it's going to happen soon. And look, when you think about Chainlink, whose token again is Link, L-I-N-K, it's not necessarily the sexiest project out there. It's not necessarily the biggest gainer, certainly not actually. It's been on a slow and steady increase here looking at the last year. But that being said, it is definitely one of the best positioned. Interest, once again, in tokenized real-world assets, RWAs, is only going to grow, and so will the CCIP. Data, as we've heard so many times, is the new oil here in the 21st century, and oil needs a pipeline to get to where people are and where they're using it. And then if that pipeline works, they can buy gas, right? And if you agree with me so far, then the conclusion is very simple. The data pipeline in Web3 goes through Chainlink.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.